Hey everybody, Jake here with Jake Wu Market Research to go over the broad market updates and some individual updates into mid-May. And before we jump in, I did want to mention that this is going to be a kind of a broad general overview, as it always is in these videos. If you want more in-depth analysis on exact price levels and that type of thing, definitely check out my Twitter subscription for only $10 a month. This is where I go in and really dive in deep into some of the technical levels that are pretty tedious to go over and pretty tedious to do, especially if you have a full-time job or just really busy during the day where you can't really find these technical levels yourself. So that's something that I provide in the Twitter subscription. It's only $10 a month, as I mentioned, and you can check it out in the link in the video description below. Also, before we jump in, I do want to mention that I do have the partnership with Optimus Futures. I did mention a video or video series about learning how to trade futures coming, and that is going to be coming hopefully in the next couple weeks. I'm going to start doing videos on this next week with the CEO of Optimus Futures. And full disclosure, I'm really not into futures trading and haven't really been into futures trading, only charting it. So Matt is really going to give me a rundown on futures trading, as well as kind of go over some of the things that are beneficial to futures trading, some of the risks, some of the areas that, people have questions on. What is the leverage and what is really the risk of leverage in futures trading? All of the kind of main questions people have. So that will still be coming. Sorry, that was a little delayed, but we are still working on that. And on top of that, if you are interested in getting a TradingView Plus account for 1 month free, Optimus Futures does have a special going on where if you open and fund an account with Optimus Futures, you can actually get a free month of TradingView Plus. And TradingView can actually be used with Optimus Futures. You can kind of plug Optimus Futures into TradingView. So if you are interested, definitely check the video description below for that. The directions and all the details will be mentioned in this video description as well. So now that we've got that out of the way, let's look at the broad markets. And as I mentioned, we'll be looking at a kind of a just overview of what things look like, and we'll be looking at the weekly candle chart for all of these different charts that we'll be going over. And so one thing I'll mention here, the markets have done pretty well over the last couple weeks after we had that pretty decent move down back in to start in late March, and then really started to move down in early April. And so we've had kind of a nice bounce here. And the question is this a dead cat bounce, or is this actually, continuation up and reversal into the summer months? So the thing to keep in mind here is really this very simple trend line that we have, or trend zone that we have on the chart. And you can see here that this area acted as resistance multiple times, pretty much up until February. We finally broke out. We pulled back. We actually broke back down through this trend zone, and now we are retesting this area. And so we actually had a pretty strong candle for the week for kind of the broad markets, at least for especially the S&P 500. But if you look under kind of the hood of things, there's definitely things that are kind of reason for caution. A lot of individual names are not participating in this move up. Even though the indices are moving up, doesn't necessarily mean individual names are following. And a lot of these names, especially kind of more growth names, are definitely having a little trouble here. So we're seeing a little bit of a discrepancy going into mid-May here. But for now, for at least the S&P 500, you can see here that we did have a pretty strong week, but we are going into this trend zone that has been resistance in the past. It's been support pretty much in February and March. As I mentioned, we broke out in February, and then we kind of just rode up along it for multiple weeks before we broke down in April, and now we're retesting that area. So definitely at least a sign of caution going into the middle of May until we can really get back above that zone. And pretty much the same thing with NQ here, the NASDAQ. You can see here that this previous resistance zone that we were watching pretty much in the beginning of the year, we broke out and technically broke out in January and rode up along this trend zone for almost 2 months, broke down through it in mid-April, and now we are retesting this area. So if you follow me on Twitter, you definitely will know the term SR flip. That's kind of what we could be having here, where you pretty much have this previous resistance, We break out, it flips to support, we break down, and now it's flipping to potential resistance once again. So this is definitely an area to watch. And same thing, is this potentially just a dead cat bounce? If you look at the MACD, you can see here that we did, cross to the downside back in early April, and you can see here that we did have a dead cat bounce in August when we did have the last MACD cross. So we had 3 weeks of upside and then we continued down. So is that kind of the same pattern that we're seeing here with this recent MACD cross to the downside? Remember, the MACD is a little bit of a lagging indicator, so it can take a few candles to either continue to play out or just play out in general. So just because we're moving up does not mean that we're out of the woods yet. And, this is something to definitely consider, especially as the individual names, individual stocks are not necessarily showing these same weekly candles that we're seeing on, the S&P 500, NASDAQ, that type of thing. So definitely keep that in mind going into the week ahead. And the Russell 2000 is next, and same thing. You can see here that we've technically had 3 weeks in a row, but is this just a dead cat bounce? And, are individual names starting to roll over again? We'll just have to see. But at this point, we did technically get away with a green close on the weekly candle chart. We are holding above this volume shelf. So you can see here that we kind of had this volume shelf from last week, this lower one. We continued up, except you can see here that this area kind of acted as an area of supply. However, we technically are above. And the point of control is really the volume node. That's the largest volume node in the entire volume profile. So that would be this volume node here. If I pull out the arrow, that would technically be this volume node. That's the point of control for the entire volume profile. But if we were looking at this individual kind of volume shelf, this aggregation of volume nodes, this is what I would call kind of the point of control of this particular shelf. We technically closed above that. So, that is definitely kind of +1 for the bulls into next week, but still we do have some overhead supply that we'd want to get above really and close above for a better chance at continuation up for the previous highs that we saw back in April. So kind of iffy on this one, but technically, not the best looking weekly candle close. And, the fact that we did not technically close above the top of the shelf gives me some caution going into the week ahead. Another thing that's giving me caution into the week ahead is definitely Bitcoin's price action. Bitcoin has really pretty much done nothing since mid-March, to be honest. And we've slowly been hitting these lower lows here. We had a lower low last week. But you can see we had a pretty strong hammer candle. So if you look back on Bitcoin, there's a lot of these hammer candles where the next candle, you actually will have a pretty long wick as well. So just because we have, this pretty ugly candle here, technically, if you want to zoom in, this is technically a bearish engulfing candle. At least at this point, you can see that it's pretty much has the same open as last week's close, and then you can see we're clearly engulfing the bottom of this body from last week. So all in all, definitely not the best looking weekly candle, but Bitcoin is a very volatile asset. I mean, a lot of people forget that a 10% move in Bitcoin is pretty much nothing. And a lot of people kind of really forget that, especially when we had such a run back in pretty much since the beginning of the year, plus, pretty much since, I'd say September, we've had some pretty strong runs, and then we consolidate for, a month or two. So you can see here back in December, we pretty much went nowhere for almost 2 months again. So if you look at the all-time highs that we saw on March 11th till now, technically we're definitely a bigger range than we had back in December. And honestly, if you look at the range here from the high to the low, that's about 20%. And if you look at the market, if you look at this chart, that's kind of just barely a blip on the radar. From here, from all-time highs to the low here, about 23.5%. So if we really want to compare this simply to the last time that we consolidated for about 2 months, there's not a huge difference. It's about a 20% difference in the high versus the low at this point. So as I mentioned in December, January timeframe, that was about 21.4%. Here from the all-time highs to the low from last week, it's about 23.5%. So just keep in mind that these drawdowns and this volatility in Bitcoin and other crypto names, especially even more on other crypto names, altcoins, that type of thing, have pretty big ranges that they trade in when they are consolidating. Now, is this distribution? We'll see. But for now, this is still kind of a flag formation. And, it's not a perfect flag, right? We've got some of these wicks that aren't perfect. And you're never going to find a flag. And if you do, it's just a very textbook flag. But generally, a flag is more or less just a setup, right? It doesn't have to be wick to wick in a perfect flag. That rarely happens in the market where you have that perfect of a flag. But you can see here that we're clearly trending down after this big move up, forming this flag. And so if we were to continue to move up, I would say it's going to happen in the next couple weeks, or this flag would kind of invalidate. But for now, I'm really watching to see if the low from last week holds up, and if a weekly close happens below this low, I think for the most part, this flag is pretty much invalidated at that point. All right, Mara. This is a name that a lot of people like to follow, so I'm just touching on it simply because it's a very followed name, and pretty brutal of a week here after earnings, and a lot of names had pretty bad earnings this week. But Mara, with almost a 13% move down on Friday, definitely was not a great look for the bulls. And one thing that I want to focus on here is this volume shelf, right? So generally, if you have a volume shelf and then you have a volume gap above, the upside target is your next area of liquidity. So essentially this next node, this next kind of area of volume nodes. Now, the question is, well, what would be something that could act as potential resistance within the gap, even though we're not at the break-even supply yet? And that's when you use the anchored VWAP. And so you can see here that price almost rejected right at this anchored VWAP zone. I created a zone instead of just using the anchored VWAP, essentially to capture this wick right here. So you kind of have more of a zone rather than just one anchored VWAP. So pretty much you just go in, you double click here, you go to inputs, you go to band multiplier, make sure that the band calculation mode is on percentage, and then you just click lower band here. And that's how you can create these zones. And that's essentially why I create these zones, to capture sometimes this price action that didn't get right up to the VWAP, but it got close. And so you can kind of create an area to watch versus just one exact line, because rarely does price respect these areas to the cent. And so that's really why I like to use these zones versus just one particular line. But all in all, close below the bottom of the volume shelf. Bitcoin definitely looking a little iffy here. And so we'll have to see how this plays into next week. But overall, I wouldn't say this is the best candle close by any means. Coin, another name that is definitely having some trouble after an incredible start to the year. And, sometimes you really have to put things in perspective. Yes, it has not been the best 2 months or so, and that's pretty directly correlated to Bitcoin. But if you look here, we're down from last week's low, about 30%. As of now, about 28% or something based on Friday's close. But if you look, this is a pretty typical breakout scenario, right? You've got resistance, you test it, kind of consolidate, you finally break out. We broke out in early March, and then you come back to retest the area that you broke out of. In this case, this is a diagonal trend zone. It's not a horizontal trend zone. But if you do want to use a horizontal trend zone, you could simply take pretty much this area right here, these previous highs, this pivot zone from March and February of 2022, and we're kind of at this confluence zone here of multiple areas of potential previous resistance flipping to support. So not only do you have the diagonal support or potential support a little lower, but you also have this this horizontal zone that price is kind of nearing the bottom of as well. So, that's something to consider going into the week ahead. And if you really want to see how I draw these zones, pretty much I'm just going to use this wick here from this candle from January, and then I'm going to connect it to this wick here, and that creates the zone. And you can see here, just connecting these 2 points captures a lot of these wicks that occurred after that. So that's how you can kind of create these zones versus just one line, especially when you're using either diagonal trend zones or horizontal zones. I would definitely focus more on this diagonal zone, but regardless, not a very strong close at all for the week. And you can see here that pretty much going into next week, the bottom of this SR flip zone goes into the lower 80s. And so that's definitely something to keep in mind going into the week ahead. NVDA, a little bit of green this week. Initially a pretty strong move on Monday, and then you pretty much just chopped around. But the main thing I want to focus on here is, price is pretty much trading right at this volume shelf. It's pretty much like closed literally right in the middle of the point of control here, right around 900. So, same thing here. Is this just, I wouldn't call it exactly a bear flag, but is this just kind of a little bit of a dead cat bounce before we continue down? We'll just have to see, but for now we are holding that shelf, and it actually looks pretty decent going into the week ahead if you zoom in into the daily candle chart. And this is something that I provided in the Twitter subscription, all the details on this, the upside target and the invalidation of the bull thesis and all of that. So if you are interested in more details on NVIDIA, definitely check out the Twitter subscription. I did post a detailed analysis post and charts on the daily chart as well for this name. But I think earnings are around May 21st for this, based on what I read today. So we do have about a week and a half left before we get to earnings. So keep in mind, anytime we've got earnings, there's always that inherent risk of some crazy action happening. But we did see a lot of names kind of move up into earnings before they got annihilated, right? So Disney was an example, Shopify was an example, PLTR was an example. So if that pattern continues with NVIDIA, it would make sense for us to have a decently strong move going into the earnings event. And the technical setup is there for a potential move up off this volume shelf into the week ahead. Tesla, this thing cannot catch a break. We get 2 green candles and just a big move down once again. But same thing that I was talking about with a lot of these names. We broke out of this diagonal trend zone, pretty much this red area that has been going down since the start of the trend zone back in late December. We gapped up, filled the gap this week, and now we're starting to move down towards this diagonal trend zone. So if we did do that, going into next week, we could be looking at maybe like the mid to upper 150s if we do get that continuation down to retest this area. At this point, not a great look for the weekly candle chart. Obviously, that can completely change within 1 week's time. But ideally, what we want to see is a kind of a flush down to this trend zone, a nice hammer, and then that would set us up for a potential nice move going into the end of May. But for now, this candle definitely suggests that we could have more downside going into the week ahead to potentially test this diagonal trend zone below, which would be that SR flip phenomenon that we talk about a lot, where previous resistance flips to support. AMD, I really want to like this setup. I mean, the daily candle looks decent, doesn't look great, but the weekly candle setup is definitely something that is definitely worth noting here. I would say that the main issue is this October pivot zone, this VWAP zone, which acted as short-term support here, has now acted as resistance multiple times over the last 3 weeks. Pretty much we broke down back in mid-April, and we've just kind of chopped around within this area for the last 3 weeks. So this is kind of a example of what I'm talking about, where we have some decent candles forming on the weekly charts for the S&P, NASDAQ, Russell 2000, kind of iffy there. But if you look at something like AMD or even NVIDIA, we didn't have that same type of candle forming for these individual names. And so that's always something to keep in mind going into the week ahead, when you have that a little bit of a discrepancy where you're not seeing these individual names kind of forming those same strong candles as we're seeing on some of the indices. So all in all, I would definitely become a lot more confident that this is a potentially longer term reversal if we can get back above this October pivot VWAP. But until then, we have an inside bar going into the week ahead. And, that's a pretty neutral setup. Until you really break above the top of this candle or below the bottom of this candle, so pretty much the top, meaning the wick from last week, or the lower wick from last week, it's kind of just a very neutral setup, and there's just not a ton of edge. There's a slight edge on the bull side of things based on the daily chart. I talk about that in the Twitter subscription in the weekend update. But for now, it's on the weekly chart. If you're looking at kind of a longer term view, this is a very, very neutral setup, versus maybe like a 1 or 2 day move up or something like that. PLTR, this is a name, one of the examples of a name that got absolutely demolished after a pretty strong move to the upside. So you can see here that pretty much from Friday's close, we moved up about almost 10%. And, we moved literally just right up to this previous resistance zone and stalled right at this resistance zone before earnings. So we closed pretty much right at this area into earnings, and then after earnings we just got demolished here. Technically, this previous pivot zone, this previous resistance zone from November of 2023 has flipped and is flipping to potential support. So we saw that back in mid-April, so we pulled back. We kind of found a little bit of a support zone here, moved up for about 2.5 weeks, got demolished after earnings, and now we're pretty much back to the bottom of this SR flip zone. So going into next week, it is going to be very interesting to see, what happens with this area. Do we break down? If we do break down, we do have that gap below to watch, and so that's something that to definitely keep in mind. I think PLTR is kind of becoming a little bit like Tesla, where you've got people that are just really, really into PLTR for whatever reason, and you kind of have this, just have a lot of people potentially bag holding. Definitely if you were able to get in over the last year, you're probably not bag holding. But if you look back and zoom out a lot, from the IPO, a lot of people got stuck in this area in the 20 to pretty much 30 area zone here. So right around this area, if I had to guess, a lot of people capitulated down here. Some people probably averaged down, but the average person probably capitulated in this area. And so maybe you had some new buyers come in that actually have some profits here. But, for the most part, this is definitely not the strongest looking setup that I've seen going into mid-May here. Technically, as I mentioned, we're still at this SR flip zone, this horizontal zone, and really horizontal zones are stronger than diagonal zones simply because price has memory. We can look back and say, okay, price was at this point back in November. When you look at a diagonal zone, it's not the same, right? The diagonal zone is constantly changing. It's sloped, right? So each week that area technically changes, and there's not as much price memory as just a basic horizontal zone. So for now, this horizontal zone is pretty strong, has been at least. Absolutely brutal candle, just engulfing candle and outside bar for this week from the previous candle. So going into next week should give us some clarity on how things look after a full week of trading next week. And let's look at ARM. This is a name that initially got kind of hit after earnings and had a pretty strong comeback to end the week. You can see here that we've got this symmetrical triangle starting to form here. And one thing that's pretty interesting here is really, in general, in technical analysis, using confluence zones. So a confluence zone is essentially an area where you have, let's say a break-even supply zone and a VWAP, or a VWAP and a gap. Or in this case, we have this diagonal trend zone, this red trend zone here. And if we're measuring the volume profile since the October pivot, and by the way, if you ever see any of my charts that have October pivot or all-time high zone or all-time highs or whatever, anything that's in blue with this black font, that is the anchor point. So anytime you see a chart that's just randomly got October pivot or May pivot or anything on it, that's just essentially telling you where I'm starting the VWAP or I'm starting the anchored profile. So in this case, I'm starting the volume profile, I'm measuring the volume and where volume is aggregated since October when we pretty much bottomed out here. and you can see there's a lot of volume above, and that happens to correlate or pretty much happens to be in the same spot as this diagonal trend zone going into the next week. So if we were to make a big upside move going into the week ahead, you do have potential resistance pretty much from around 122.50 all the way to the top of the zone and the point of control of this break-even supply area above, right to around 127. You could overshoot a little bit possibly if we get a big move to around 128.50. But this is kind of what I mean by these price levels change, right? So if we were this, see, here's candle from this week. If we move over, this is essentially going to be the candle. So if we move straight up, the top of this diagonal trend zone, or the diagonal trend zone ranges from around 121 all the way up to around 125.65. Now, if we just chop around here for a couple weeks, then all of a sudden this trend zone, the bottom of the trend zone, is around 116.50, and the top of the trend zone is at 121.30, 121.25, or 121, give or take, 50 cents. So that's what makes it a little tough to use diagonal trend zones, at least for actual, invalidations or targets, because it's kind of a moving target, right? So next week, if we were to use the diagonal trend zone as a target, it would be, as I mentioned, the bottom of this zone's right around 121.25 all the way up to around 126.50. But that's just for next week. If we move to the next spot over here, then that target pretty much is around 118.75 to around 123.25. And so the steeper the slope is of the diagonal trend zone or trend line that you're looking at, the bigger the change is going to be candle to candle. If you have, something like this where, and let's just make an imaginary line here, something like this, pretty much the next candle is going to have relatively almost the same resistance zone or potential resistance zone, because the slope is not nearly as steep. If you have something with a slope this steep, candle to candle, those levels are going to change dramatically because of how steep the slope is. So just keep in mind that using these diagonal trend zones is definitely not, it's not something that should be disregarded. It's just that it gives you a better idea of what a pattern is forming. And then you kind of have to go into a smaller time frame and kind of look at the horizontal levels, the anchored VWAP, some of the break-even supply zones. And in this particular case, we do have a break-even supply zone above that we can reference. So you can technically use both of these together. But all in all, I mean, it definitely is something that looks interesting into the week ahead. This is one of the few candles that looks pretty strong going into mid-May. And as I mentioned, if we did move up going into the week ahead, that would range in, anywhere from the low 20s to around 125, 127 area above. And, I give these ranges because that's how the market works. I'm not going to say, hey, resistance is possibly at 125.67, just because that's not how things work. The only time I use precise price levels is when I'm looking at gaps, because a gap is simply just that is the price. The gap fills at X price. And so that's the only time you'll see me use kind of a very precise number. In any other case, definitely, it's more of a general range. Anyways, the only thing I want to point out here, because it's always important to have, okay, what's the bull case? Obviously, if we move up, the bull case is potentially testing this diagonal trend zone and this break-even supply zone. But the bear case is, keep in mind, we have this huge pole here, and we have a little bit of a flag forming. So we definitely could potentially have a bear flag here as well. And this is where invalidations come in handy. You can have a thesis, but you have to know, okay, when does it invalidate? In this particular case, this is where you go into a lower time frame and see, okay, maybe we invalidate below, XYZ VWAP, whatever the case is, whatever you choose. But this would definitely be the bear case here, is this big move down. You've got kind of this potential dead cat bounce, and then this could be just simply a flag forming into mid-May as well. So let's see what happens going into the week ahead. This is really where you got to dive into more kind of precise lower time frames to get a better idea of what's going on from a day-to-day perspective. So hopefully this was helpful. This has been the first video I've done in a while. I was in Japan for a couple weeks, and then, just kind of took a little bit of a break from videos. But hopefully this video is helpful, and hopefully you enjoy these videos. And I'll continue to do them probably about every few weeks, because at the end of the day, if we do these too often, we're kind of becoming redundant. You don't want to just look at charts every week, and if they haven't really changed, there's nothing to update. But I will definitely continue to do these videos just every 2 weeks, every 3 weeks. And as I mentioned, if you do want more in-depth analysis and written analysis with price levels to watch, VWAPs to watch, gaps, one of the most tedious things to do in the market is finding these gaps. And gaps are some of the most powerful levels of support and resistance that you can use. That's what I do. I kind of do the tedious work in the Twitter subscription, so then you don't have to do it. You can just go in and see, okay, if we continue up, the upside target is the gap above. And then, I'm identifying what that price is, what that VWAP price is, whatever the case is, as potential support or resistance, or what is the downside trigger? What is the upside trigger for the bull or the bear thesis? And so, that's what I really provide in the Twitter subscription. So as I mentioned, $10 a month. The link is in the video description if you want to sign up. And just definitely remember, Optimus Futures does have that giveaway. There's more information in the video description as well. Hopefully everybody has a great weekend. Thank you for watching. If you do enjoy these videos, please like and subscribe, and we will see you next time.